Well, here's the thing. If you guys are following this investment style, it's heavily dependent on owning assets that produce cash flow. When I bought that almond orchard, it produced cash flow immediately. And because it produced cash flow immediately, I could put a value on it, right? Because I know how much I'm willing to pay today of my money in order to buy a stream of cash that's going to happen in the future, right? So imagine if you were to buy an annuity, effectively what you're doing is you're paying an insurance company a pile of cash in exchange for this future constant stream of cash flow. And of course, right, there's the risk there, how long we live. So if you live a really long time, that turns out to be a really good investment. If you only live a little while, then it's not such a good investment. So what we're looking at when we're looking at Rule 1 type investments are assets that produce cash flow. That's the key. And then we can put a value on them. Bitcoin, notably, produces nothing. It is kind of like gold. It's a hedge against something else happening, I guess. Even gold you can turn into jewelry, but Bitcoin, I guess the most notable thing about it is that it avoids the difficulty of moving assets across borders in a revolution where they won't let you do that kind of thing. So for that, it's quite valuable. For us, I don't know how to value it. I don't know how to know that Bitcoin's worth $60,000 or $20,000 or $2,000 or $1. I have no way to know that. It's just people buying something that's completely speculative, and we try to avoid that as much as possible.
I have been a Rule 1 investor for going over a decade now. I started when I was in high school, and as a young investor, I'm constantly looking for new ways to invest that both will make me money and also make me feel like I'm having a positive impact in the world. And so far, the Rule 1 method has by far been the best way for me to accomplish both those objectives. So Rule 1 does get a lot of questions about fad investings or crypto. And I often love hearing what I consider the best investors in the world, what their takes on these things are, because maybe I don't have an actual opinion on something, but I want to follow people who I believe are experts in these kinds of things and experts in making money per se. And you can accomplish this through multiple means. You can get on Twitter and you can look at Bill Ackman, who is absolutely one of the best investors that has ever lived, talk about his feelings of crypto and then reiterate his own strategy for how he invests and how he's made his billions of dollars.
Sure. So we haven't invested in cryptocurrency. I've been expanding my knowledge of cryptocurrency because I think it's an interesting sort of phenomenon. So there's really, I would say, two classes of cryptocurrency. There's Bitcoin, which I think of as a pure speculative asset. It's only worth what someone else will buy it from you for. And then there are some cryptocurrencies that are being used to incentivize behavior and build a business model off of that, behavior modification. And so I think crypto is here to stay. It's really interesting in terms of the business opportunities it helps create, although I wouldn't invest in Bitcoin or a currency that's a pure speculative asset. It's another, I think one way to think about it, it's really a business tool that you can use that opens up, where you can create, incentives for commercial behavior and build a business around it. And that to me is pretty interesting. Although to date, we've not invested in any currency.
I think that Rule 1 is the way that you should look at investing as opposed to trends or fads out there in the world. I want to say like cryptocurrency, where with Rule 1, you can look at, let's say, a restaurant that is doing really well and it's going to make 2 restaurants and 3 restaurants. And you can look out 5, 10, 20 years and come to a really easy conclusion that, if they're going to have X amount more restaurants than they do today, they're going to be X amount more profitable. They're going to be worth X amount more. And where it gets hard when you start going into cryptocurrencies is that instead of one asset that everybody is maybe going to, there's just this super huge dilution of all sorts of cryptocurrencies that aren't backed by anything. There's no tangible asset behind them. It's just one person buys it on one date and they hope that somebody in a future date is going to buy it from them at a higher price than they currently bought, with no bedrock. I mean, if you look at the restaurants, if you buy a restaurant stock, you own a piece of all those restaurants. And if they're going to have more in the future, then the value of what that stock is representing is going to go up in the future based on that. With Bitcoin or Ethereum, they're really cool ideas. And I think they do have, use cases in our world, but they are what you would call a high risk speculative investment, because they don't offer that protection of underlying assets that are growing and easy to understand. Rule 1 is definitely the low risk, high reward option for the millennial Gen Z generations looking to invest, because there are so many amazing companies that this generation, the younger generation, identifies with, that are going to be the companies of the future. And all you have to do is, basically invest in those companies at, wonderful, great prices, and then let your investment and let those wonderful companies be the next 20, 30 years of your investment horizon. The cryptocurrency industry is oppositional to the Rule 1 way, is that we as Rule 1 investors look at an asset that produces cash flow, and we value the investment based off of what the current cash flow that company is producing and our estimates of what it's going to produce in the future. And so that could be anything. It could be a home that is renting at X rate now, and you look out over the next 10 years and you assume it's going to produce this amount of rent, over that. I mean, where you look at PayPal and people processing payments off PayPal and the money they're making now, what they're going to do in the future. And that cash flow gives us the ability to then assign a value to those investments and have a lot of low risk confidence that the price for long periods of time should not fall materially below what those assets are producing. Warren Buffett is quoted as saying that in the short run, the market is a voting machine, but in the long run, it's a weighing machine. And I do believe that Rule 1 investing over long run, if you can find these durable businesses that produce cash flows, you have a very, very high chance of making money in your investments. Versus if you look at cryptocurrency, it is an amazing revolutionary technology, but the actual coins themselves that are built off of the blockchain they don't produce you anything. If you buy one, you don't get a dividend or any type of payment off of that. You only make money exclusively off the price of that asset going higher in the future. And if it goes lower, there's nothing that stops it from continuing to go lower. You've seen, 2022, we saw multiple currencies that went to zero effectively because, people suddenly realized that there was no intrinsic thing that was keeping them afloat. I just want to state that crypto investments, fad investments, do not match the Rule 1 investing style. We are looking for long-term, intrinsically driven value investments, and we stay away from anything that's high-flying, trendy, faddish that, we can't put a 10, 20-year stake in the ground behind. And one of the biggest reasons that we follow that is because Rule 1 is predicated off of this style of investing that's been around for 80 years and it's proven. And so we're not trying to go off on these new unproven types of investments. It's much easier to just look at what has worked for the past 8 decades and follow that style instead.